Equity Bank began humbly as an insolvent building society. And I remember in 2003, Equity Bank had less than £1 billion in their total assets. And they came out of a strategy session with a theme to focus on the 80% of unbanked population. And there were very many doubting Thomases because a few other banks had tried and failed. But Equity Bank soldiered on, and it succeeded in changing how banking is done in the country and in Africa by making that woman who sells vegetables on the roadside, otherwise called Mama Mboga, to feel comfortable and to belong, to feel that they belong in the banking halls. And today, Equity Bank has won very many accolades, and it is the second largest bank in the country and also the second most profitable bank in the country. And when I think about Equity Bank and the entire transformational story of the banking sector in Kenya, I am tempted to think that insurance companies are at the same juncture as banks were at that point in time, with less than 3% of the population accessing insurance products. Insurance companies are faced with probably the biggest opportunity of their lifetime. My name is Pius Moshire Mugo. I'm the Managing Director of Nabo Capital, and you're watching Invest in Africa. To tap into this big opportunity, insurance companies must ask themselves, why is there low insurance penetration? And there are a myriad of reasons why. Number one, the fortunes of the insurance sector are closely tied to the performance of the economy. If an economy is doing well, the insurance companies will tend to do well, and that penetration will continue improving. Number two is just culture. We live in a place where we believe in socio-informal insurance, and that's why there are so many wedding committees, funeral committees. People just have found other alternative ways of insuring themselves in situations which otherwise insurance companies would have been able to step in. Number three is that generally insurance products tend to fall low in the hierarchy of needs of individuals, and therefore people will tend to prioritize other things. Number four, there's just this general negative perception about insurance, and some of it is just perception, some of it is just reality, which is attributed to delayed processing of claims or rejection of claims or many other stories that tend to go around insurance product. The fifth reason, and this is really where I want to dwell in, is just around product relevance. Are the insurance products today relevant for the target market? And we're just looking at the general population demographics for Kenya. 75% of the population are people who are 35 years and below in Kenya, and generally also in the continent. Now, this is a generally youthful population, and the way the youths perceive insurance products is a bit different from the older generation. They don't see traditional insurance products as cool, and therefore insurance companies have this challenge. They need to find a way of innovating products that are relevant for them. Let me take another market segment. The Muslim community. The Muslim community is about 4.3 million people. That's about 11% of the Kenyan population. And this is another market segment that is almost completely untapped. And all these market segments, and we can go on and on giving examples, they present opportunities to the insurance sector. And I want to take just one example of a product innovation that has recently happened that I think is a demonstration of how insurance companies should move forward. And this is Takaful. For a long time, the Muslim community were unable to participate in the traditional insurance products. And this is because they're generally not Sharia compliant. And this led to the emergence recently of Takaful. And Takaful is a word that means to help each other. and it's a type of insurance product that is Sharia compliant. And in Takaful, the policyholders do not transfer risk to the insurance company, but they prefer to share the risk by pooling resources in a fund, and when the risk materializes, the claim is paid out of the fund. And this is one innovative way that insurance companies have been able to tackle this segment of the Muslim community. And I think it has huge growth potential. There are many other opportunities. If you look at the informal sector, there are so many SMEs who are not able to access relevant insurance products. So the challenge to the insurance companies, how can they come up with relevant insurance products that will be able to cater for the needs of these very unique market segments. Behind every insurance product are investment assets. And let's just continue with the example of Takaful. Takaful is a Sharia compliant product. It means you cannot invest in companies that sell tobacco, alcohol, gambling, pornography, military equipments, or even weapons. And that means it excludes quite a huge investment universe, including banks, because also interest is not an attractive, is not considered to be a Sharia compliant product. If you look at today the Nairobi Stock Exchange, it means only a handful of companies would actually make it to a Sharia compliant fund or product. And that means this poses a challenge to insurance companies to go over and above the traditional assets that they have been used to investing in, to find other alternative assets that can be able to meet the unique needs of these unique products, like Takaful. And one of the things that insurance companies must do is to open the investment universe. So if you're an insurance company in Kenya, then you need to start thinking, how can I invest in Africa? How can I invest beyond my borders? They also need to think about investing in, for example, private equity and other specialized vehicles that like real estate investment trust. So really the challenge here is that to tap into this huge opportunity that is facing insurance companies today in Kenya and in Africa, the industry captains must train their attention now on strengthening their investment functions. And they will require a lot more experts than they have required before. For example, to be able to offer Sharia compliant products, they will need Sharia experts. To be able to tap into opportunities that are beyond their borders, their country borders, they will need fund managers or experts who have a track record of investing beyond the Kenyan borders. To be able to invest in, for example, private equity, they will need experts in private equity, and many more experts that will come into play in order to put together insurance products that are innovative and relevant for the market segments that have been previously ignored. At Nambu Capital, we have been investing across Africa since 2009. So we are just almost doing our 10-year anniversary, and we've had tremendous experience. We have made money, we have lost money, we have been able to come up with a track record that stands by itself and speaks for itself, and we'll be more than happy to be able to help insurance companies to look beyond the Kenyan border to expand the investment universe in order to respond to this opportunity that is facing insurance companies today.